Hello, all channel members. I hope you're doing good. I'm going to try to provide more value to my channel members, and there's only a couple of ways that I could do this because I don't want to talk about bullshit. I talk a lot about contracts. I talk a lot about covered calls and selling cash secured puts, and I explain that, and I think a lot of my channel members know that. But if you guys have any questions, please feel free to ask. Back in August, I started talking about a Bitcoin bull run, an Ethereum bull run, and a crypto bull run that most people don't want to listen to. And I explained that to my channel members, and some of you took advantage. I started talking when Bitcoin was right under 30,000, I think like 26, 27,000. Right now, Bitcoin is right around 37,000. So some people were able to make money on that. Now I want to talk a little bit about a stock that I have and a stock that I have options in. They just had earnings. It's going to be called Robinhood, ticker symbol HOOD. It is nearing a 52-week low. I'm going to go over the entire earnings today and then give you some of my thoughts, the good, the bad, and the fair. What you guys do is up to you. I highly suggest that you do your own research and do your own due diligence. Robinhood is a love it or hate it type of stock for various different reasons, which I'm not going to go into in this video, but I see a lot of bull case scenario for this stock. Probably in the long run, buying the stock outright is better than buying options. I have the stock outright, and I also have an options play, which I will share with you. If you guys want to know the options play, it's January 17th, 2025 at a $20 strike price. Now, I had this before. I lost probably like 70% value on it because I bought when Robinhood was higher than this. And I bought yesterday when Robinhood dropped. And I bought, right at the 15% drop that happened yesterday. If this is something that you like, in the comments down below, please let me know. Adam, we like you going over the financials like this in depth. Please do it for other companies. And then I'll be happy to do it for companies that I'm not even, getting into. But Robinhood is one of those stocks that I think can make a lot of money in the future and has been so beat up. And I think that there's a couple of catalysts for Robinhood in the short term and in the long term that makes it a good value play and a good growth play. I know that sounds crazy what I'm saying, but let me go over the numbers and try to explain it a little more. Let's get right into it. First and foremost, Robinhood is currently trading at $8.37. Yesterday it was down 14%. This is why I'm talking about it right now. And it's currently up pre-market 2.7%. I think 15 or 14% down is absolutely unwarranted. I think it's unjustified. And I think that there's a huge opportunity because of that. Now, again, don't listen to me, listen to yourself. But as you can see, Robinhood has absolutely been blasted. 14% yesterday, 9% last day, 5 days, 15% for the last month, 13% the last 6 months, barely up year to date, and absolutely decimated over the last year, 5 years, and all time. Now, if you go back for the last 6 months, it's interesting because right around here, it went down, but right around this August mark, right around June, it started to recover and it went all the way up to like $13. And at this point, my options literally doubled and tripled. But of course, that wasn't enough for me and I wanted it to keep going up and it absolutely retreated. But there was a huge run right here. And I think that there's an opportunity because it absolutely dumped. Now, the last 52-week low was right around this. The last 52-week low was somewhere right here around the $7.70 mark. So you are absolutely getting a fantastic deal and essentially a 52-week low price. I know it's not exactly a 52-week low, but essentially. And the current market cap is just $7.6 billion. But before we look at this, I just want you to understand, Robinhood has $5 billion, $5 billion on hand, cash and cash equivalents. And if you take the total liabilities and then you take the total assets, there's a price to book ratio. And a price to book ratio is the value of the actual company against the actual market cap of the company. Now, I'm not so good with these numbers. Alejandro is a lot better. But before these earnings, the ratio was like 1.03, so it was about even. I'm going to give you an update with this later, but right now you're getting an under 1. And under 1 puts you in a value stock territory, We'll go over that in detail a little bit later in a different video. So this is the earnings call. I listened to the earnings call, and then I'm going to give you some information, but I wanted to share my screen. I did a lot of work here to actually show you, what's up. Let me make this a little bit, actually, no, this is good. So this is the net cumulative funded accounts. So this is the total amount of accounts that Robinhood has. So they're making a few gains right here. The total amount that they have is 23.3 million. They added this right here. They added 120,000 right here, which is good. Year over year, they added this right here, 360,000, which is also good. This is the assets under custody. And although we went from 89 million to 87 billion, 89 billion to 87 billion, we are starting to come back up. This is from Alejandro's website, which I will post in the comments, the website. And as you can see, Q1 of 2020, this is right after COVID. It literally just shot up Robinhood. Then it became flat. And this is post-COVID right here. Everything just started, going down. And then it kept going down, down, down. And now Robinhood is starting to make a comeback, right? Even though we're at 87 right now, it is still in an uptrend in general. Now, assets under custody, there's a reason why assets under custody went down, which I'll go over in just a moment. But as you can see, this is starting to go to pre-COVID levels and beyond. It's a much better company today than it was in 2020, essentially, because of all the offerings. But there was a huge influx of money due to COVID. So you guys got to make your own decisions of what you think about that. Net deposits is going down, okay? This is bad. That means that the total amount of the deposits is going down, although they're still up in a total. So, they're in an uptrend, although it's starting to go a little bit down, but they are still up 18% year over year. What's the 18%? 4 billion in net deposits over 2.7 billion in Q3 2022. The problem is from Q4 of 22, Q1 of 23, and Q2 of 23, we're actually down, and it just keeps going down and down. However, remember, this ends in September, and there was an uptick in crypto trading in October and now in November. That's my own personal opinion, but I'll get to that in just a moment. This is the secret sauce right here. This is the secret sauce right here of Robinhood. This is what they're trying to do. They're trying to increase gold membership. So if you guys don't know, they charge a monthly fee for gold membership. I think it's like $6 or something like that, $10. I don't recall the exact number. It's super worth it. And you get a lot of extras for being a gold member. You get 4.9 annual percentage yield, and you get a 3% match if you have an IRA, which means if you're transferring an IRA or if you're opening an IRA, you're getting a 3%. And if you transfer additionally, you're going to get 1%. So I'm sorry, opening an IRA, 3%, and transferring an IRA, 1%. It's really, really big. It's nothing small. You know what I mean? It's not a small thing. They have 1.3 million gold members, 6% of their total customers. However, the amount of gold members is doubling that 6% right now. And as you can see, Q3 to Q4, 4.59%, then it was 3.5%, then 4.2%, and right now they have 8.3%, 8.13% growth. They went from 1.23 million to 1.33 million, adding 100 gold members. This is freaking huge because on average, gold members have a higher amount in their accounts, tens of thousands, because they get in that APY. In turn, Robinhood uses that to make net income interest. And 7 times more gold members will open up an IRA, individual retirement account, which is huge because that's a different type of clientele that Robinhood desperately needs. Not the meme traders, but people that are more interested in their financial future. And Robinhood is going to keep growing this. How? They're making a credit card, and they're going to offer special features for gold members. That's where the secret sauce is. The gold members is the future of Robinhood. And this is why I believe that this is going to be a very good long-term hold, because this is growing like wildfire. I love Robinhood. I love the user interface, and I would not want to use anything else. I have the unfortunate luck of having to use Charles Schwab for my custodial accounts for my kids, and it's absolutely disgusting. It's shit. I hate the user interface. Robinhood just makes you feel good, and it's just so easy. That's my opinion. Total net revenue is down $9 million. Okay. So it went from 486 to 467. Quarter 3 of 2022, 361. That's good. We went up to 380. That's good. We went up to 441. That's good. From 441, we went up to 486. That's fantastic. But from 486, we're down 9 million to 467. Most of this is coming from crypto, or lack of, which I'll explain in a moment, okay? Their expenses are flat. Quarter 3, 2022, 335 million. This quarter, 353 million, which is down from last quarter, 357 million, which is flat. Quarter 1, 2023, 352. They're reducing a lot of costs, which is really good. Adjusted EBITDA, down 14 million. EBITDA stands for income. The E is income. B is before. I is interest. T is taxes. D is depreciation. And A is amortization. This is the amount of money that you actually make before fancy accounting. And then you have something called GAAP, which is generally accepted accounting principles. And this is the conversion of the EBITDA plus after fancy accounting if you're profitable. For the first time, they had a profitable quarter of 25 million, which came out to 3 cents per share. This was last quarter. This quarter, they're actually down 85 million. Why are they down 85 million? They had a one-time legal fee of 104 million. If you take 104 million minus 85, you get positive 19 million. Positive 19 million. 19 million gap, and you would have approximately the same exact number for gap profitability, which would actually be 2 cents per share. Now, we don't have 911 million shares. I think we have more now, but you get the picture. We would be gap profitable, okay? We would definitely be gap profitable of 19 million. So the gap profitability would actually be down by 6 million. All right. They're foreseeing positive gap profitability next quarter. This is what I want you to pay attention to. They're super innovative. That's true. This is all the things that they have been doing. That's like their development line. This is super innovative, guy. 24/7 trading for a lot of ETFs and a lot of individual stocks. This is huge. They're innovators. They're the first ones to do this. Just like a lot of things that they did, like, for example, no interest trading when they first opened up 10 years ago. Before that, people were buying $7 trades. So if I wanted to do $100 worth of stocks, I had to pay a $7 fee. It was obscene. Then Robinhood comes out and makes things so much better. They purchased X1, which is a credit card company. They purchased them for 104 million. With that, I think they got like 15 million worth of cash for the 104 million. And that allows them to make a credit card. The credit card is going to drive growth and enthusiasm from customers, which is then going to increase Robinhood Gold perks. They offer 4.9% yield. This is the best on the market. And this keeps going up and up. And they offer 4.9% yield to gold members. Why? They want gold members. They want bigger money accounts. And 3% for retirement account match, and 1% you get if you bring money in. I brought in a shit ton of money from my other accounts, and I made a really, really nice pop. These are things that Robinhood does not get credit for. Innovative, 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 innovative. It's all growth for the future. And that's why I think that it's a value company in terms of the stock price right now, with over $5 billion in cash, and a growth value because of all of these innovations that's going to keep increasing growth. And I'll explain to you why it's going to increase growth. They're going to offer advisors, okay? Advisors like certified financial advisors, CFAs. So you could talk to somebody about your type of investments and what do you want to do. By the way, I'm not a financial advisor, purely the same in education. So if you want to speak to somebody who's a financial advisor and not for just entertainment, for real deal advice, they're going to offer this for you. And I believe that it's going to be free to deeper relations. I like that. Active trading, like I said, this was innovative, 24-hour markets. But right now, they're going to open up futures trading. Almost nobody offers futures trading. There's an entire futures market. And this is like options trading on steroids, if you want to call it that. Why would people rather do futures? Tax incentive. The tax incentives of futures is much better, the tax structure, than options trading. Because options is essentially all short-term capital gains. Futures, there's a completely different structure, and it's definitely a lot better. And nobody else offers this. Not Webull, not like Charles Schwab, as far as I know, not M1, none of them. So they keep innovating. They're expanding to the UK market, which is going to be huge for no-fee trading. If you speak to Arnie, if you speak to Couch Investor Neil, they all complain about the shit that they have to go through in Europe. Besides for this, they're going to increase and expand crypto trading in the European Union, which is what I believe is going to bridge the gap of why their revenue is going down. This is the total amount of retirement accounts, guys. Right now, they have 1.1 billion of 87 billion in retirements. Last quarter, they had 0.8 or 800 million of 89 billion in retirement accounts. And the quarter before that, they only had 300 million of a total 78 billion. So the amount of money in the retirement accounts is going up. And these are very, very good clients that you want. This is the growth in retirement accounts. Again, 400,000, really, really good. So this is the amount of money that they made, the assets under custody, I'm sorry. And this is the 87 billion. And then in the dark green is net cash held by users. The light green is cryptocurrency. And this is options and equities. As you can see, there's a decrease in cryptocurrency. Now, obviously, there's a decrease in options and equities, 63 billion to 62 billion. However, 12 billion to 10 billion is a lot bigger of a drop because this number to begin with, sorry, my computer just spazzed, so I had to re-go. But what I'm saying is going from 12 billion to 10 billion, although it's a 2 billion drop, is a lot more massive than 1 billion from 60 billion, right? 63 to 62, and then 12 to 10 is huge. They're losing out in the crypto war. And now their profitability is literally measured in inches, just in millions. So this is absolutely freaking massive. Their net deposits is going down. This is the total amount of deposits that they have. So deposits were going up after COVID, up, and then it just starts going down. Then it finally started to recover in Q3 of 2022. And then it's just been on a downward swirl. This is the bad of cryptocurrency. I'm sorry, this is the bad of Robinhood. This is the complaints. This is what Wall Street is seeing. I'm not going to sugarcoat it. It's bad. The only thing that helped them is that in Q3 of 22, it was so shitty, only 2.7 billion. Now they have 4 billion. The problem is next quarter, they're going to have a huge problem because they're going to go from 4.8 billion. And if they can't match 4.8 billion, they're going to have a downward spiral. This is bad. This is why Wall Street can keep downgrading them. All right. This is the average revenue. Okay. This is the average revenue that they're getting per the amount of per crypto, net interest, and others. So in green, this is going to be transaction-based revenues, the lime green right here, the lighter green right here, transactional. Now, this is going to be the net interest revenue. So this is the amount of money that they actually make from your money, from you holding money on Robinhood. And as you can see, they were gap profitable last quarter, 26 million, and they would have been gap profitable this quarter, around 16 million. So the gap profitability is literally coming from the interest rates. So if the interest rates tank, it's going to suck. But I don't think the interest rates are going to tank for the next 3 to 6 months. So they have definitely this quarter and probably next quarter where this is going to go up. Now, remember, I don't give a flying fizzle for my options past 2024. So January 17th, 2025, probably in the summer of 24, I'm going to be selling my options. I'll get into it at the end of this video. And I don't know what's going to happen to my shares. We'll see. That's why I have two types of plays, options and shares. So this is transaction-based revenue. And so basically this 185 is this right here. This 185 is this right here. So they break down the 185. So in the light green right here, this is equities, 27 million. It's essentially a little bit higher. This is going to be options, and this is going to be right here, options. So options is 124 million. Options was 127. So options trading is actually going down, which is bad because they're like the options trading hub. That means people are just trading less because I don't know where else they're trading these options. I traded options on TD Ameritrade and Schwab. It's terrible. They absolutely grape me in fees. I said grape, not the other word, just saying. And this is interesting, okay? Crypto. So crypto went down, guys. Crypto went down. How much did crypto go down? Crypto went down 8 million. Now, remember, when we're talking about gap profitability, we are talking about in millions. Last quarter, we were 25 million gap profitable. This quarter, we're actually negative, but would have been gap profitable without that $104 million fee. How much? 16 million. So 8 million is huge. Why did this go down? In June, Robinhood delisted all the fun cryptocurrencies, and they left only Bitcoin, Ethereum, and Bitcoin derivatives like Bitcoin, Satoshi Vision, things like that. Proof of work type cryptos. But they got rid of all the proof of stake type of cryptos like Cardano and things like that, Solana. So there's less crypto trading because of that, because those are the fun ones. Those are the ones that can give you that 10, 20, 30, 40, 50 bagger. People don't love Bitcoin, especially degenerates, meme traders. I mean that with respect on Robinhood. However, again, growth, in the next couple of weeks, they're going to have European Union crypto trading, which is probably going to be, Bitcoin, Ethereum, and Bitcoin derivatives, right? So hopefully this number keeps going up. Again, Robinhood is not a forever trade. It is a short-term play, and we'll see what's going to end up happening. After the next bull run, when it comes to crypto and stock trading, which it seems like everything's starting to go back, and when rates are going to start getting cut, people are going to start spending more and buying more cryptocurrencies because they're going to have access to cheaper money. I believe Robinhood is going to take off, and I don't believe that the rates are going to be 5.5%, whatever the federal funds rate is right now, the whole 24. I think they're going to go down. I think they have to go down. This is new. Credit card income. So they got 4 million in credit card income, which is big. This is the net interest revenue. Net interest revenue is the amount of money they make on money in Robinhood. Okay? This is this big one right here. And this is how they make the money. This is something new. Again, this is why I'm saying Robinhood is a growth play. But you also have a value play right now. Now, if the stock price of Robinhood would be $10 or $11 or $12 or $15, this would not be a value play. This would only be a growth play. The reason why I'm bringing it to my channel members is because right now, at around $8, I believe that this is also a value play. Why? because they have $5 billion in cash on hand. Now, this is their adjusted operating expenses. Their adjusted operating expenses went down. Operations went up 3%. Marketing went up 3%. General and administrative went down 10%. Why did, by 10 million, I'm sorry, up 3 million, down 10 million. And then broker transactions and technology development is even. Why did this go down 10 million? So we went from 110 million to 100 million. Why? They fired 7% of their staff last quarter. And this is to become as lean as possible. And this was a really good move. I want to show you something else. Adjusted operating expenses keeps going down. They're lowering their full year 2023 outlook. This is good. Okay? Operating expenses goes down, then revenue goes up or even, and that means that profitability goes up, increases. This is good. This is stock dilution, but what I really want to show you is this. Everybody hates on Robinhood. Now, the owners of Robinhood are rich, probably billionaires or close to billionaires. They were supposed to get almost $500 million of stock-based compensation. They canceled this, I believe, in February. Bro, the owners of Robinhood canceled $500 million of stock-based compensation reward. This is 2021 Founders Award cancellation of $485 million. This is huge. They reduced the dilution of Robinhood by canceling this. This is absolutely freaking massive. This is not small. This is a big deal that Robinhood doesn't get credit for. I really do believe that Vlad, as bad as he gets a rap with the whole GameStop debacle, AMC debacle, I believe he really is trying to grow his platform. Let me see what else I got over here. And there goes the thing right here. This is how much cash they have. They have $5.4 billion in cash. $5.4 billion in cash. Now remember, their market cap is 7.6 billion. Their cash is 5.4 billion. That means that the market cap is only 2 billion above cash. But remember, besides for cash, they have a shit ton of other assets. And then this was the mergers and acquisition. The mergers and acquisition is they spent 104 million to acquire X1, which is a credit card company. This is great. This is the same thing that like SoFi does when they are acquiring companies to try to better their financial products. And then they purchased 55 million shares. This is from Sang Bankman-Fried for 606 million. And these are all just financials. Guys, again, I do have shares. I bought 1,000 shares at $11. So I spent $11,000. I'm down on that, and that's okay. And then I bought options. The options are January 17th, 2025, $20 strike price. You don't have to hit the actual strike price to make money when it comes to options. The closer and the more aggressively and the faster it grows to a certain point, you make money. If, for example, Robinhood goes back to $12, you're not going to make 50%. You're going to make several multi-baggers. So if you invest 1,000 right now for those $20 strike 2025 contracts, and Robinhood, let's say before the end of the year goes to $15 or Robinhood goes to $13, you're not going to make 1,000 to 1,500. You're going to make 1,000 to probably 2,500. I don't know the exact calculations. There's an options calculator. I'll show it to you, but you guys get the gist of it. This is my play for Robinhood. I'm going to get out as quick as I can with those options. If Robinhood comes anywhere close to that, $20, $25 range, which would be crazy. I'm not saying it will. I'll sell out of my shares too because forward growth is taken away. And I'm going to reinvest it in something else. And then if Robinhood drops down again, I'll buy back the shares. And I'll tell you why. It's not my most conviction play. It's not like I love Robinhood is the best thing in the world. I believe it's the best trading platform. I think they're going to keep growing globally after the UK and after crypto in Europe. And I believe that crypto market is going to start pumping like a mofo, and they're going to relist a bunch of the fun cryptos when we get a Bitcoin ETF. Also, a Bitcoin ETF is going to push a lot of buying pressure for crypto, specifically for Bitcoin and Ethereum. And this is going to help Robinhood. Now, Robinhood needs to show an increase in revenue. Robinhood needs to show an increase in custody of assets. And Robinhood definitely is going to get a huge boost when it comes to crypto trading. Also, the next bull run of when rates are going to go down, which I believe is all going to happen. The bull run for crypto and rates going to go down the first 6 months of 2024. And that's why I'm saying that I'll probably be out of this play in the summer of 2024, right? The first 6 months is January, February, March, April, May, June. So then July, August, and September, which is literally Q3, so a year from now, is probably when I'm going to be out of this play. You guys can do whatever you want. Do your own due diligence. Do your own research. I know this is like 30 minutes long. Let me know if you like this type of content. Let me know if you want more of these breakdowns. And I'm sorry, I don't throw fluff. I try to give you my own personal plays. Sometimes they make money. Sometimes they don't make money. But I'm trying to teach people as much as possible. And if you're not going over a presentation like this, if you're not listening to earnings call and you're investing in a company, shame on you. You need to be listening to earnings calls. You need to be marking up presentations. If you're not doing this, you're not maximizing your efficiency and growing as an investor. And that's the whole point of today's video. Not Robinhood, although that is very strongly secondary, but to learn how to do this on your own. You need to learn how to do this on your own. You need to take the time out to learn what you're investing in and make yourself a thesis, the good, the bad, and make a decision. Guys, thank you so much. I really appreciate you. I'm off to Amit's channel. Me and Adam, his name is Adam too, Palantir Palantards. He runs the Palantir Discord, is going to be guests on Amit's show. Thank you very much. In the comments, let me know if you have any questions, because I don't know what to make you content on. And I want to make sure you guys get your $3 value. Thank you and have a great day.